All right, so welcome again to another session. My name is Ernest. I'm gonna be your instructor for today, and we're gonna cover another video for you guys. And if you like this video, don't forget to give it a thumbs up and comment. Really appreciate that. So this is how you're gonna encourage us to continue. So if we bring you value, so if we don't bring you any value, so we won't know exactly, if those video really helping you out. So if they, because those are the set of video that we're putting out there for like you guys that's going to take the exam. So we'll do some test question to see how you answer the question compared to when I try to explain the answers to you. Always remember when we're doing this test question, pause the video, then after that you come back, then you answer, then you verify to see if you have it correctly. All right. Again, like I say, I don't know everything into this course. It's just like I'm just doing the best that I can to help you guys as much as possible. The only thing you need is just a 7 you need in the exam to pass. So I don't really have to cover every single thing into this material. So I just pick some stuff random and to see if you guys can, use them. So let's go ahead, get this started. And if you like what we're doing, you can also subscribe to the channel. So every time we post one and put the notification up, so you know exactly when we're coming in. So no surprises. All right, because if you're not subscribed, you may not know when we put the next video in. So let me see if I can share this iPad screen again. Oops, let me make sure I share that. Always be patient with me when I'm sharing because sometimes that can happen. Okay, so when that happens, I want you guys to be patient a little bit. All right, so let me go ahead, get this out. I think we're good. And I also apologize if you see when you're watching this video, because I think, okay, I see why. It's because I share my iPad, but let me see. Is there a way I could, if I could, maybe, you know what, I'm gonna turn my camera off, guys. So, because the last time I checked, it's blocked the screen. If I leave it like this, I'm not sure what's gonna happen. I hope it doesn't block anything. So you could, I hope it doesn't block it. I would love, at some point to, so you'll be able to see the question. If not, just pay attention to when I'm reading the question, so you can know exactly, what I'm talking about, so you can see what I'm putting. Let's go to this first question. Let's get to work, because as MMC University, we love helping people, face their challenges. All right. And at the same time, if you don't have a company you really work with, you wanna join this team, let us know. Okay. If you wanna do that, just let us know, and you can send us an email at mmconline16. And if you wanna be part of our organization, we'll be more than happy to help you. All right, so enough of that, let's get to work. And agents, clients need additional information. So an agent client need additional information. So you're not doing this well at all. Okay, let me see. Need additional information. Okay. Insurance, which agent owner cannot provide. Oh, additional insurance. So you need additional insurance. So the person need additional insurance. The client need additional insurance, but the insurance cannot provide that. Okay. So the agent has to solicit additional coverage from another otherwise insurer. What is this process known as? What does that call? So, okay, your company doesn't want to give you enough coverage, so you want more coverage than what they give you. So you want more. So post it, answer. So hopefully you didn't put A. Is that control business? So now rejected. Rejected It's somebody that denied completely. So that person get denied completely. So this person did not get approved at all. So therefore, it's not that one. So the answer, correct answer for this one would be this one, excess. So if your company, for example, let's say your client sent a policy for $250,000, okay, and your company say we can only give that person 150,000. So that's mean there is $100,000 excess coverage. Okay, this is called excess coverage. Okay, so now that person goes outside, the insurance company to get that. That's what that is, excess coverage. Your company not willing to give you the whole thing, so you have to go find somebody else to give you the rest, another company. So that's called excess coverage. At that point, you don't need an appointment to do that. Make sure you know that. Rejected is when your company sent the whole 250, but they denied the client. So if that happened, so unfortunately, that's it called a rejected risk, or they can put rejected risk, and that'll be a denying. So you can, if you get the approved to, you don't need an appointment just for that one deal. All right, so that's good. Enough for that one. Now this one said, who does the secondary addressee provision protect? Now this is a provision. That's means since it's a provision, you're gonna find it from one policy to another policy. So I did from one company to another company. That's when it come with it. Provision, remember, provision means it come with it. But there's something about secondary addressee. Who get that? Now remember when we're talking about the grace period, it's 30 days, right? Remember that? 30 days grace period. But if somebody is a little bit older, they have an additional 21 days. Okay. So that's give them a total of 51 days. Who gets that? Somebody who's a senior, somebody who's 64 and older, 64 plus. They don't get that. That's mean they have an additional 21 days grace period. So therefore, they have a protection to add a secondary addressee in order for them, they're not to lose the policy. Hopefully that help you. You should be able to see this answer would be this one. You will dare to protect somebody the age of 64 and older, or they could have put elderly insured. Okay, they could put that as well. It's mean the same thing. So 64 and older. That's pretty much enough for that, because the insured whose policy has been replaced, no. The insurance company, no. Contingent, So the best answer for this, it's Charlie Berry. Okay, let's go to the next one. I'm gonna do this a little bit quicker so I can do my best. All right. How long must insurer maintain records, information collected from a senior? Keyword is senior. Maintain records. So pretty much, if you go into test question, you find maintain record for senior. So you're looking at A. For 6 years after the initial contract. Now, for 2 years, 2 years could be right, but it's not for seniors. That's for anybody else, somebody who's not a senior. This is for everyone else. So somebody who's not a senior, like premium receipt, for somebody who's not a senior, can keep that for 2 years. But because that's a senior, we know it's not 10 years for sure. So I hope you put senior for 5. Does that make sense? Okay, next. This next question says, what kind of policy issues certificate of insurance? So who get a certificate? Somebody who's a participant in a group. You see, if you know that who get the certificate of insurance, so that would be somebody who participated in the group. So is it any insurance? No. Yes. We're gonna go to that. Individual insurance? No. They don't get certificate. Non-qualified annuity? No, that's not insurance. So the correct answer for this one would be only group insurance. Make sense? Okay, let's continue. So group insurance, they don't that get that certificate. All right. Next question. Which of the following persons is required to hold a producer license? Now, pretty much they're asking you, who's supposed to get a license? Because there's some stuff that when you do it, you must have a license in order for you to do it. A person who administers employee benefits. No, you don't need a license. No, that's an X. Let me do that better. Nope. Choo-choo. A person who negotiates insurance. Kind of feel like this sound like if you're doing negotiation, you might need to get a license, don't you think? A person who creates insurance advertisement? No, anybody can do that. I don't need to have a license for that. I'm sorry, a person who takes messages related to claim. Now, it's just message that you're taking. So if you do negotiation, so of course you gotta be licensed. Of course, you have to be licensed in order for that to happen. So far, so good. Told you it was easy. Somebody understand the concept of what you're being tested for. Now, we're going to talk about another concept here in this question. What is reinsurance? We do. We write the insurance. I put that so you can understand. We write the insurance. If there's a reinsurance, that's when it's company insurance or that's insure or the insurance company. So it's just like if you have ABC company that go get insurance into XYZ company. So a company insure themselves into another company. Why would they do that? To avoid catastrophic losses. For example, if you have somebody covered for $1 million, not $1 million, $1 trillion, and that one person died, the company have to pay $1 trillion. That person can make the company go bankrupt. So in order for them to protect themselves from that person dying, so they do reinsurance. So ABC company go buy another insurance company, go to another insurance company, ask them, hey, I want some protection. So they buy another insurance. That's company to company. At that point, you're looking for a company that's searching for insurance, but the company that's gonna give them the coverage is gonna be an assuming insurer. So a sitting insurer who's going to assume an insurer. So A sound like it because you find the word sitting insurer and then assuming insurer. But then wait, there next. B said an agreement between an originating insurer and an agreement between a domestic insurer and a foreign. Bam. An agreement between an insurer and an insured. Well, no, but that is not a company. So that's wrong already. So we know. And so the only thing that makes sense is so reinsurance, it's when a company looking for to insure themselves into another company. Next, two individuals in the same class, same race, same age, yet they charge different rates due to insignificant factors. It doesn't matter. Can I discriminate against peoples in the same class, same stuff? No. No discrimination all across. So therefore, cannot discriminate. So is that a misrepresentation? No. Adverse selection. Adverse selection is just like when the company says, you know what, I want to take everybody in the good health, forget about the ones that don't have good health. Can I do that? No, that's not what this is talking about. Discrimination, I'll put it in check one. I believe that. Law of large numbers, no. The law of large numbers simply mean the larger a group is, the more accurate to predict the outcome of that group. So the more people you have in a group, it makes things a little bit easier for you to determine how many of them are gonna get sick, how many of them are gonna die based on the sickness, because the larger the group, you can make a better accurate statement about it. So that's why they say the law of large numbers. So this have nothing to do with that. So therefore, I kind of feel this was discrimination. It's just like, imagine two people, they're twins, same age, because one making more money than the other, they say, you know what, because you make more money, I'm gonna charge you more. Or because you're making less money, I'm gonna charge you. So you can't do that. All right, let's go next. Try my best to make sure I can get this going for you guys, okay? All right, let's go. Give you a little time. You can pause the video and read the question and then answer it. Don't just wait for me. That's not cool. When you just do it like that, is not the best way to do it. Who examined books and records? Who? Now you're looking for someone. Who examined books and records of the insurance company in Florida? Is it the governor? No. The chief financial officer? Sound like it. But we'll check. In the IC? No. The insurance commissioner? In some state, it probably that. But for our purpose for this one, since talking about specifically about Florida, we're gonna go with B, because B is the correct answer. How often they do it? Every 5 years. Remember that, every 5 years. Who paid for it? The company. Whatever the company they pay for it. Okay, I'd say company paid. I put company pay instead. Okay. Who paid for the examination? They do. So that's mean it's a way to discourage you not to do that stuff as a company. Because if you do, the more I come in, more money gonna cost you. So you might as well. I'll come every 5 years, but if I feel like I need to come more often, I will, except you're gonna pay for it because you're wasting my time. You can come into your office. So therefore, do your thing the right way. That's why we urge you, agent, do what you're supposed to do to keep your company in good alignment so they don't get in trouble. All right. All right, next question. Insurance contracts are agreement between which two party? Which two party? Who have the contract, by the way? Because insurance is contract, okay? It's an agreement between two people. So if it is an agreement between two people, right? So who's those two people are? Attorney, nah, what is this? Lawyer deal with that. Producer and consumer? No, it's not about producer. Producer, that's you. You don't have the contract with the consumer. It's not you have it. Okay. Insurance policy owner, that sound like it. Producer and the insurance, no, it's not you in there. You have your own contract as an agent for sure, yes. But the purpose of this, they're not talking about that here. When you and your company have a contract because you're working for them, no, that's not what they're referring to. They're so referring about the insurance contract itself is between who? Between those two people. The insurance company and the policy owner. Usually they're insured. Okay, but the policy owner, they're the one that purchased the policy. So if they're insured and the policy owner is two different people, it's still gonna be with the policy owner. Make sense? Good question. Next. When a group policy terminates, now this group policy terminates, how dare you to terminate my group plan? Okay, but they have the right to, because it's an expense. So the company might decide they don't want to give you any more group coverage. So they can do that. Every individual insured under the policy will be entitled So that's me. See, it's not a welfare program. You have to be entitled to it. Okay, you have to be able to qualify for it. Individual policy insurance has been insured in the group. So pretty much asking you how many years, if you have a good policy at your job and you're not in the plan for at least for this much time, you're not going to be able to get coverage if the company decide they're going to terminate the plan. So you won't be qualified for it at that point. Is it 7 years? 1 year? 3 years? 5 years is the correct answer for this one. So in order for you, if you have a good plan at your job and they terminate the plan, and they can, in order for you to convert your coverage with that 31 days, you can convert, remember that? You can convert 31 days without proof of insurability with a whole life. Okay, you can only convert to a whole life. Remember that. So you have 5 years. If you're not in the plan for at least 5 years, you cannot convert your coverage. Not fair, not good, but it's part of the deal. So therefore, D is the correct answer for that one. Okay, we're moving along. The exclusion of a life insurance and health guarantee association in an advertisement. Can I put that into an advertisement? What this saying is, I put my insurance company, because I'm doing the advertising, my insurance company, it's Life and Health Guarantee Association. They know that we are doing business as such and such, and we guarantee our company is the best. Can you do that? No, that's illegal act. You can never ever use Life and Health Guarantee Association, okay, in your platform and any advertising, any literature, anything. So Life and Health Organization is a non-profit organization that was created by an insurance company to help solve insolvency company. So they want to make sure the insurance company they're in alignment when it comes to the finances. So when people start dying, because they will die, so they don't have enough money to pay those claims. So if they're not financially sound, so they can go ahead and ask them, hey, you're gonna have to do something quick, or you have to exit our market because you're not solvent. So therefore, use that name, it's illegal. So it's not B, it's not allowable, it's not mandatory. Unfortunately, is this one forbidden. So that's illegal. You can't do that. I don't even know how to spell illegal. I hope that's how you heard the word illegal. All right. Next question. In what way can an agent demonstrate a high standard of ethics? Ethics, no. What is ethics? No right and wrong. The difference between right and wrong. So if something is wrong, it's wrong. Right is right. So that doesn't mean because the client do not understand, when I sit with them, I have to make sure I do a good job. So let's see what the answer say. Recommending qualified retirement plan to its client. That's not ethics. Putting a client best interest at first before their own. Oh, that would be sound like that. And making enough commission and setting up and so setting up and meeting monthly production. So the correct answer for this one will be B. You need to put the client's best interest before your own, but a lot of times the agent try to do that. They try to pretend they try to put the client first, but you have to make sure you do it right for the person that's sitting in front of you. Think it was yours. How would you need to be helped? So put their interest first before yours. Even though once you do it that way, guess what? You're still gonna make money. You're still gonna get paid because you do such a good job for your client. Next question. Which rule will apply if an agent knows an applicant will go into cash an old policy and use the fund to purchase a new? So if I have something old, I'm doing an R with a new. Old replaced by new. So that's called replacement will apply. It's not reinstatement, it's not conversion, it's not disclosure, replacement. So that's replacement. You have an old thing or an existing thing, then you replace it with a new thing. So therefore, replacement will apply. Next question. A married couple purchase. Good. Married couple. Okay, have fun. Enjoy your life together. Okay. They purchase life insurance policy and the newborn baby. Oh, now they're buying it on who? On a baby. Why you do that? Because they can. Because they have insurance interest on the baby. Or they say, oh no, that's not fair. Why would you put insurance on the baby? Because you don't understand why. Because if you do know, when the baby pass away, God forbid something happened to the baby, you're gonna affect your money. You would put insurance on that baby too. Because you do not understand. Okay, because the reason the married couple can, because they have insurance interest on the baby. If the baby pass away, it will affect them, and so therefore they can put insurance on them. They are concerned about what would happen if the policy, either one of them, unable to do what? To continue making payment. So now they worry about, man, since I do this policy for my, what happens if I pass away in death or disability? Okay, and the baby cannot work. So what's gonna happen with my policy? How can I protect this for my child not to be able to pay? Is it automatic premium loan? Is it over premium? No, the over premium would be nice. It could be the right answer, but that's to protect the parents. But now I want to protect the child. So this is not, this is the payer want protection for the child. Payer benefit right there. That sound like it. Guarantee? No. So the correct answer for this one will be payer benefit rider. So that's correct. That's question for this one. And let's do the last one quickly. Oh, I guess that was it. So I thought it was my bad. I thought it was 15 questions, but unfortunately it's 14. So this is pretty much that, folks. So when it's coming for you for that exam, okay, you really need to understand how you can answer this question, identify, okay, the test question, they always have like test topics. I'm not saying test topics are like, there's some clue words, there's some word that on that question along the line that will be telling you, this is what they're looking for. This is what they're testing you on. So therefore you need to know exactly what's going on so you can be able to make a better decision when it comes to that exam. So take your time, understand the concept, and I'll see you at the top, and I'll see you guys on the next video, because remember, the more you study, more questions that you answer, the better you become. So practice, 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 practice. Okay, practice. Say there's a practice make is that practice make, I don't know, whatever that saying is. But when you practice, the more you know, the better you're gonna make decision. But except don't over study, don't overdo it, but know the concept of the material. I wish you guys success. And if you like the video, don't forget to you're gonna see the little thumbs up, press it, right? And make sure you leave a comments. The comments are very powerful. And if you pass the exam, those videos help you, come back here and let us know how those videos help you out. And I'll see you guys at the Take care. Bye-bye.